What's good, YouTube? Welcome back to another episode. I'm gonna keep it a buck, man. I haven't been feeling too well this weekend, so I'm gonna try to keep this short and sweet. I did want to get out our February Opex update. This is our February Opex update. So we just completed month 2 of the options expiration. So you know what we're gonna do today? We're gonna go check out our SPX levels, see where we're at. We only got 1 week left in February, so we'll be getting another video where we wrap up the month of February and talk about March and what to expect. But let's just kind of go through what February has been like. I mean, damn, it's been one hell of a roller coaster so far in 2022, which we talked about early on that it would be a bumpy ride. So today what we're going to do is we're just going to go through really quick, update our levels if we need to, kind of talk about what has progressed in the market so far, and kind of talk about what we expect for the rest of this week and closing out February. And of course, like I said, we'll have our end of the February wrap-up video coming, I guess, at the end of this week, because that's when February is over. In the meantime, please make sure you press the like button as well as subscribe to the channel, so that way you can stay in lock with all of the updates as we do them throughout the year. So with that being said, we're going to go ahead and jump right into the SPX update. All right, fam. So let's jump right into it, guys. Here we are. As of, what was that? February 18th, I believe was last Friday. The market closed, or the SPX closed, at 4348.88. Now, these are all of the previous levels that we have talked about in the previous episodes. So if you have not watched the 2022 stock market projections or any of the updates, definitely go ahead and check those out. And you can see how we actually came up with the levels that you see marked here on the screen. So just to jump right in, as you can see, we are under our 4396.29 level, so basically 4400. And as we talked about earlier this year, if we look at from the highs, that 4396 or 4400 was approximately about 9 or 10% right now. So if we actually do it from the highs, it's actually showing that that is roughly about 8.8%. So if we actually go to where we close, we are now down about 9.75% from the high, so roughly 10%. So we are in correction territory. We are in a market correction that we talked about would probably happen in 2022, without a doubt. So as we continue to look at the chart, what should we expect as we close out this final week of February and going into March? So let's go ahead and zoom out and start with a monthly look, right? Because that's what it's all about. We need to start with a macro approach and kind of, zoom in and really define and see, okay, where are we headed? So as we look at this February monthly candle, clearly it's a down month, right? And we are coming pretty close to retesting those September and October lows. Now, I am recording this on Monday, so I have a little bit of a cheat code because we can actually see what the futures market is doing. And if you've been paying attention to the futures market, then you know that, yeah, we are actually already down here. And I'll go tap into my favorite, which is US 500, which is pretty close to the S&P 500 right now. Excuse this. Let me go ahead and clear this chart off. Give me 1 second, and I'm gonna do a new chart layout. Give me that. All right. So this is. Let's go to the US 500, just so that way we can take a look. All right. So this is the US 500, right? So very similar to the SPX. It tracks very, very closely. Some people are futures traders, so they like to use the ES or the futures. I don't personally trade futures, so I really like using this currency pair because I feel like for me, it's just more straight up. It's just straight price action. And that's what I like to trade. So I like to kind of use this as a way to help me gauge what is the SPX going to do. So as we use this as a little bit of a cheat code, we can see that currently right now, as of Monday, 3:30,
the market is at 4292.7, right? And so what that means is that we've actually cracked under the 4300 level. So as we finish this final week of February, a retest of those lows is looking more and more likely, right? So let's switch it back to our SPX and we'll go ahead and kind of get back on track, right? So if we think about what we just saw on the US 500 and we said we were at 4292, right? 4292, look where that probably is going to bring us right to our 4289 level. And I think if my memory serves me correct, 4289 was 10% from where we closed. I think when we use that number, I'll have to go back and double check that. But I think that was our 10%. Let me just verify that, right? Because we started from here. Boom. Yep. Yeah, about 10%. So I think when we did the math, that did give us our 10%. So 4289 is going to be roughly 10% from the yearly close of 2021. Man, I gotta really get up on my years and stay up to date. But anyway, so yeah, Tuesday, we should definitely expect a gap down to this 4289. Now, another thing that a lot of people don't know is that when you use the US 500, it does give you a little bit of detail as far as what you should expect, right? So if we go take a quick step back and go look, you can see here that we have this wick, right? And this wick gives us a high of 4394. So basically, what's that, 4400, right? So with that being said, we should assume that between, I would say, Tuesday, right, we could see some type of action where we either shoot up real quick and just tap this and then get rejected, or we open here and then the market tries to go up to get some stop losses or whatnot, or try to knock shorts out, right? Because, you know, people are probably going to have stop losses up in this area before reversing. So essentially what I'm looking to see is, okay, how will this candle here, right, translate into the SPX? Now, if we just say this is not here, right? Let's just say this candle isn't here, and this is all we see, and then I go take you back to the SPX. I mean, damn, it looks exactly the same. You got your big risk off candle here, you got your bounce, and then you have two rejection candles here. So literally the same thing, big red candle, bounce, and boom. So this is telling us what we should expect to see, you know, from a candle wise, and this is a weekly chart on the SPX. So somehow, some way, we're going to find our way back at this 4400, but don't fall for it, because as we can see right now, we're still trapped at this 4292, meaning we'll be somewhere down here. Now, of course, if you're keeping up with the news, you know, we got all this Russia stuff and all these, you know, Fed rate hikes and all these, it's just a lot going on. So there's a bunch of narratives that's going around right now that is really spooking investors and making the market go risk off, and the sentiment just isn't really good. So again, as we get into the final week, and now I am on a daily chart here, it's like, all right, what should we expect? So we're going into a short week. Let's keep that in mind as well. So tomorrow we got Tuesday, and then Friday, that pretty much marks the end of the month, because I believe Monday is the 28th, and then we go into March, right? So right now we already know that, okay, come Tuesday, with all this volatility and all this news going on over the weekend, we should expect some type of gap down, and then maybe even a retest back up to this 4396. But essentially what I'm saying is that I think this next week or so, we're going to be within this range here. Now, to think of that, right, if we just go from this 4289 up to this 4396, that's a 2.5% increase there. So that's going to be a pretty big range, right? Creates for a lot of volatility. If I do the reverse and go from 4396 down to 4289, that's a 2.5% drop, right? So we're going to have about a 2.5% trading range when it comes to the SPX. Now, the next key to point out is if we break this 4289, meaning if we get a daily close, a candle that closes at or below 4289, what happens next? Well, what I believe happens next is shit gonna get real ugly. Just to keep it polite, you feel me? Because if we break this 4289, essentially what happens is that it looks like we're creating what is known as a head and shoulders pattern, right? So if I change it to a line graph, you'll see even more clear. You have your left shoulder, you have your head, you have your right shoulder, and then you have your neckline, right? And the theory is that when you break this neckline, you typically will travel the distance of the head down to the neckline. So if I were to use my proofing, and you guys seen me do that before, and if I go from the top of the head down to the neckline, right? And let's say we do break our neckline, which is right here, and we've traveled that distance from the top of the head down to the neckline. Look where that puts us. That means that we could be on a trajectory for the SPX to come all the way down and possibly test 39.51. You heard it here first. 39.51. It is possible, right? And I mean, just look at how beautiful when we did proofing, it fell right into previous levels that we had marked off on our chart again, right? Now, if I change it to candles, let's kind of examine why this 4,060 and 39.51 is such a zone that, you know, investors may want. Well, what do we have here? That good old lovely gap that happened back in 2021 that never got filled. And if you've been rocking with me for a while and just paying attention to my channel, you guys know how I feel about gaps. Most, I'm gonna say 99% of gaps get filled. Actually, 95%. Actually, I did the study, so it's 95% of gaps get filled. Not all gaps get filled. So there's actually been proven that not all gaps get filled, but a gap like this, I think it's gonna get filled. So when we put that into perspective and we think about all of the catalysts and we think about all of the things that are about to happen in the market, we're about to go into March, what is typically one of the slowest periods of the stock market. We're also about to go into March coalition, which we know brings heightened volatility into the market. We are also about to probably maybe see the start of World War III. Not wishing that. I don't want to wish war on nobody because, you know, innocent people are going to lose lives and stuff like that. But at the end of the day, we got to face the facts that what's going on in Russia and Ukraine is real right now. And it could also bring on, more prospects of other countries doing things as well. Mainly, I'm speaking towards China and Taiwan, something that you might want to pay attention to. But to the charts, guys, to the charts. So as you can see, based on the head and shoulders pattern, based on proofing, based on the levels that we have marked here, looking at, the structure of the SPX, it is pointing towards that, hey, if we break this 42.89, and really if we break these lows, right, because we made these lows back in January, if we get a close, right, a weekly close below this 42.23, or what was this low, 42.22, all signs point to a nice ride straight down to 4,060 to 39.51. And I believe some people would probably even call this a demand zone. Now, I'm not a demand or supply zone trader, but I'm aware of, what these are. And if I can just add in a box here, some would say like, yeah, this is a demand zone, right? Because you have this gap and like, basically you're going to find some buyers up in here, right? So this is a very critical zone to watch, that once we get in here, it's like, hey, okay, if we do get down to these levels, is this going to be officially the bottom? Now, I know I'm going a little bit far ahead because this was mainly just supposed to be a February Opex update, as well as just kind of, hey, talking about what does the rest of this month look like, but kind of giving you a sneak peek into the next episode, because this, once February is done, we will really be able to say, okay, this is where we are. This is what March is looking like, and so forth and so forth. So, I mean, at the end of the day, guys, when it comes to, this upcoming week, the Bulls got some work to do. I mean, I'm looking at this as like, okay, we'll probably get one more down red candle, which would give us, our 3 black crows. And then from here, we go into March. And again, when we just zoom out and we look at a monthly chart, right? At the end of the day, this is a hanging man, bearish engulfing candle, right? We definitely pretty much engulfed December and November's monthly gains. And then now we have a second down month, and it's not looking too good, right? And just another perspective to add in, right? You guys know I like to also look at Haikanashi candles. So if we change this to a monthly Haikanashi chart, you'll also see that, hey, January, we printed our first red month and since May of 2020. So since May of 2020, we ain't had nothing but green months from an Haikanashi standpoint, right? And now we had our first red month, and now we're about to follow with our second. And if we just look through history, typically when you get that first crossbar and you get a second one, usually 2 or 3 follow, right? So we got if you look back at February 2020, we got our monthly, and then we had the March crash, and then you had April, but then after that, we had a big rally. You go look back at 2018, October, we got our first one, and then we had 3 that followed. And then if you look even here, March and April of 2018, we had another one, right? And again, we go back in even more history, but I ain't gonna go back that far. So what this tells me is that for March, I should expect at least another red Haikanashi monthly candle, meaning we should have more downside pressure, right? And maybe even a 4th one going into April if we look at 2018, because we have 4 months of downward pressure. You also think about that we need to get clarity from the Fed on the rate hikes, and that's just going to bring another level of uncertainty into the market. So it is plausible that, hey, we may not see a new green Haikanashi candle from a monthly perspective until about March, maybe May, if we get it then. So with that being said, all I'm saying is that in the short term, right? In the short term, be cautious. It does look like that the bears are in control in the interim, right? Because if we think about this from a long-term perspective, we're still in a secular bull market, but right now we're kind of in a pause. It's not quite yet a full-on bear market. Now, there are some stocks and there's some sectors that are in a bear market, 100%, can't doubt that. So yeah, so I just wanted to point that out as well. So I feel like I went into a little bit more detail than I wanted to, but hey, if I can help anybody out and bring value and help you guys see what I'm seeing, then it's all worth it. So in order to go ahead and close this out, I'm gonna go ahead and just do a quick little recap of what we see here. So like I said, from a monthly perspective, we're set to close out February's monthly candle. Right now we're down about 3.69%. Looking at Tuesday, more than likely we're going to be somewhere around 42.89. So as we finish this month, the question will be, when this monthly candle is done forming, does it close below 42.22? Do we even come down and tap 42.22 and then kind of resort back up? And then what starts to happen when the March monthly candle starts to form? And those will be the things that we'll look at in the next episode. So again, man, I hope this episode brought you guys some value. Like I said, I wasn't feeling too well. I wanted to kind of just get on and give you guys a brief update. In the next episode, I will add in some QQQ and SPY analysis. So, a few people have asked me to do that. So I'll do that for you guys as well. So as I said, man, please make sure you like this video. Make sure you subscribe. And y'all know the phrase, man, stay blessed and peace out.